Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, September 26th, 2022. While it didn't all take place in the Globex session, the market did follow through on upside and put in three waves up, which I have labeled here on the NASDAQ and also on the S&P as that small subminute wave 4. And it appears that what we're heading into right now is the subminute wave 5 down, which should then in turn complete the minute wave 3. And then we'll have another set of 4 and 5, and that then will complete the minor wave 3. And then we'll have another set of 4 and 5 in a minor degree, and that will then complete the intermediate wave 3. And then one more time, we'll have an additional 4th and 5th wave on an intermediate degree, and then that should complete the primary C wave down. Now, let's just kind of take it piece by piece, because as I have been describing, what we are now going to be involved in is going to seem like stair-stepping its way lower. So instead of having a larger down day, just take care of it all at once, market, we're going to step it lower. And that is basically because, and let me just go back up here to the daily chart so we can get a little bit cleaner. We can see coming off, here we have A and B. Now we're coming down in a C wave, primary C wave. And that's going to consist of 5 waves of intermediate degree, of which we've completed intermediate 1 and 2. So we're inside intermediate wave 3. And then I'm going to bring it back down to that hourly chart. And what we have inside of the intermediate wave 3 are 5 waves of minor degree, of which we have 1 and 2. So we're inside the minor third wave, of which there are going to be 5 waves of minute degree, of which we have 1 and 2. So again, starting at the top, we have 1, 2, that's the first set, 1, 2, that's the second set, 1, 2, that's the third set, and then 1, 2, that's the fourth set. So there are 3, and then 4, 5 to complete the minute 3. Then we have minute 4 and 5 to complete the minor 3, minor 4 and 5 to complete the intermediate wave 3, intermediate 4 and 5 to complete the primary C wave. So we have all those sequences yet to do. Now, I'm going to go back out to the daily chart, and let's see if I can put this in. And we don't want those. We want to have, we're not removing, we're adding. Come on. We're going to add those. We're going to connect here, to here, to here. Now, so we're looking at the intermediate third wave. I'm going to go back down to that hourly chart as we walk this through. So again, what we have here, that was for actually the upside. I'm going to get rid of that. And now for this intermediate third wave, we're basically been looking for intermediate wave 3 to possibly get us down to just above 10,000. So approximately that 10,000 level, maybe it'll dip below. So it's about 1,300 points from where we are. And the market's already been down to 11,068, and that was in June. So I'm looking for this minor third wave to likely break that, clear that up, break it, and continue to head lower. Now, so do we have that? 10,057, but we also have 10,485, 10,750, 11,176. That will be where intermediate wave 3 would be equal in length to intermediate wave 1. I'm already looking for that to be exceeded because, as we have talked about, that a general observation, not necessarily a rule, but a general observation from Elliott was that third waves are most often the longest and the strongest within that 1, 2, 3, 4, 5. So within the impulse section of that, which are waves 1, 3, and 5. So wave 3 is normally the longest and the strongest. So here we are inside that third. And now intermediate third, but now we're inside the minor third and we're inside the minute third. So we're in a 3 of a 3 of a 3. So yes, we would expect a lot of power, but because of the subdivisions, and we've actually had 4, it takes more time to just work through each one of those individual smaller waves. But as we start to move down, like when we finish this minute or subminute degree, 5 waves to form minute 3, then we should get a little bit bigger of a bounce. So again, we had this bounce here. Let me just open that. Come on, don't do that, computer. It wants to. Jesus. I don't know what it is. It's not my mouse, but there's something. I got a new pad. It just likes to do that to me. Okay, so here, this actually is a little bit larger than this. It is a flat, but a little bit larger, but I'm going to accept it. It's larger than that, but I am going to accept it. And the reason I'm going to accept it is because in the S&P, it's very clear. It's very clear that it was an ABC. And in fact, the S&P's already gone down and started to put in a new low below this one. They're just deciding at this particular point, particularly today, that the NASDAQ should be bought up. So we stepped into Amazon, we stepped into Apple, they stepped back into Microsoft, they stepped back into Tesla. So we started to push and push and push, but then eventually it all starts to come back down. I believe that's going to continue to be the case as we work through this process, but it's not going to be a straight down. We may have a day where we have a large enough move, and then it could be considered the entire wave 5 of one of our components coming off. But as we move forward into these degrees to complete them, the bounces that we're looking for in terms of a 4th wave will start to get larger. Right now, this is a subminute. It shouldn't, I believe it shouldn't be that big, but I'm going to allow it because this count has been difficult. And the stepping back in to the NASDAQ does not necessarily change my count. And I'm not breaking any rules about 4th waves. It would have to overlap wave 1, and it got close, but it did not do it. And now we are heading lower again. So I'm going to allow this, and for the sake of our count. And what I'm looking for now is for it to come down at least 11,176. But what I can start to do now is I can put some additional. We're going to be looking for a 5th wave. Let's just kind of take a peek as to where it could go. And a 5th wave, 11,081. But here we got a double right there at 11,176. It's 0.786, which it's not really that popular in my book. But there it sits, and that matches up exactly with another fib that we have. But the 5th wave could be equal to the 3rd wave? No. So I'm going to really be looking for it to come in, right around here, 11,216 down to 11,076. I'm going to say 78. No. So 11,216, let's call it 11,180. When we get down to there, we'll finish this 5. Then we'll put the minute 3 in there. We're looking for a 4 and another 5. So there was that. Now, what can we expect from this in terms of a 3rd wave? So we start again from the top of where wave 1 was, wave 2, and now we're going to come here. Oops. There. So here again, we have the minute wave 3 being 100% at 11,205. But we already have the 5 just to complete that minute 3, excuse me, at 11,176. So now we're back again. We've built a zone, same place that it was before, basically, 11,205 down to 11,176. So this area seems to be pretty strong to complete this 5th, and then the minute 3. And we'll put in another 4 and another 5. So that's how I'm going to work this as we're coming off. If you're following what I'm doing, I'm just connecting my waves in terms of where the relationships, the Fibonacci relationships lie. The fifth wave is going to be related to the third wave. The third wave is going to be related to the fifth wave. So right now, that's all we have is 1 and 2 to work out where this minute third can come in. We already looked at the minor, and here is the intermediate. So a lot of things seem to be lining up right around this level. So I'm going to call this 100% line, which is on the intermediate degree, should provide us some strong support. Complete this fifth and that minute third, get another bounce and then a drop. So in here, we're basically looking for from 1300, we're looking for another 126 points. For the NASDAQ, to walk in the park. So that's what I'm looking for there. We get another bounce. I will be able to then add the fibs. Once we have that third wave complete and we've started to bounce, we can run retracements. So we would then run the retracements from the top of where wave 3 started to where wave 3 finishes. That'll give us that fourth wave. Most common is 0.382, or coming to the price territory of the fourth wave of 1 lesser degree, and that's what we just completed. So once we get the 3 in, where's the minute 4 can come? Right back to that same area. So, and then once we get that done, we've got minute 4, we'll get a minute 5. That's the one that I'm looking for to break here. For minor 3, I'm looking for it to come down closer to here. And then to just finish it out with an additional minor 4 and a minor 5. And then again, we'll follow that all the way through. So that's the story here in the NASDAQ. It again broke from what the S&P was doing. The S&P dropped cleanly into new lows below that third. So we can already start to consider that that is a completed subminute wave 5 and then the minute 3. Let's go over to the S&P and take a look. So as we left off, here we have for minor wave 3, but then we can put in additional here, and we can also put in now additional here. The first thing I'm going to take off is that minor wave 3. We'll add it later. And let's just take a peek from here. That's the third. So we're going to go from there down to there. Come on. Nope. Sorry about that. I forgot to change it. Let's try that again. Get rid of that. Go back over here. Change this to extensions. Come on. There you go. Okay, so what and where can we expect to find this? A wave 5, when compared to wave 3, I'm not really looking for it to be 100%. So I would say 618 would be our next choice. And that's at 36.23. And if you remember, we've continued to have support at 36.31. That's a much on a higher level, but that did come in as support at 36.31. So I'm going to continue to use that. I'm going to continue to use it. We have 36.31 down to 36.21 or 22. And that then will put in that subminute wave 5, which will in turn complete that minute wave 3. Then we're going to repeat the process. So we're going to end up back here and then end up rallying back into this area, coming back down again in a minute wave 5 to complete the minor wave 3. So let me just clear up the chart so we can see all of that. So remember, I was thinking 36.31 down to 36.21. Ultimately, we should find some stronger support right down there at that 3600 level. Let's see how that matches up. So we've done here. Now I'm going to go up and we're going to do the retracement, not retracement, we're going to do the extensions for minor wave 3. Minor wave 3 likely is, we got 3602. That's going to be big, but these are extending very nicely. So as far as the wave pattern is going, the S&P is doing a much better job than the NASDAQ. The NASDAQ seems to battle this all the way down, whereas the S&P is forming the waves cleanly. and was ahead of the NASDAQ for quite some time. And now the NAS is playing catch up. So we have 3602, but I actually am looking that it's likely going to come down into here. And that's the minor third. The minor third, not the minute, but the minor third. Minute, we're looking for here. The minor, I've been looking for down into here. And then we repeat the process. We go up in a minor fourth wave, come back down in a minor fifth wave. And the minor fifth wave will work out once we get that third in and complete in the four. Then we can run the same Fibonacci extensions, but they're going to be, the relationship is minor wave 5 would be to minor wave 3. We got to get minor wave 3 in there and the minor wave 4 in there before we can forecast out to what minor wave 5 will look like. And we'll repeat the same process again. So here in the S&P, looking for initially for a continued downside, excuse me, down about 36.31 to 36.21 or down to 20. It could slip lower and then it would start drifting lower down towards 3,600. Wherever it does end up, we're going to put the 5 and we'll put the minute 3. Look for that minute 4 again, back to that territory of the previous fourth, which we just finished up today. And then we'll look for the market to again decline. So to right now, for tomorrow, rally should be very minimal. And again, we may complete this subminute wave 5 during the Globex session. And then that would start the process for the minute wave 3 to be complete and the minute wave 4 to begin. If that happens, we already have our area where we're going to be looking for it to rally back to, and that would be towards where the area we just came out of today, back up towards that 3,700 level. All right. So moving averages continue to be our friend in terms of on the hourly chart. They're all still heading down. Now that we turned lower again, we got the 4. Seems such a pain, right? We needed to be up in the hourly chart because that's the one I work off of. There we go. So we have the 4 and the 8 heading lower, the 20 heading lower, the 50s heading lower, the 200s firmly heading lower, starting to, they react a little bit today, smoothing out a little bit, getting more sideways. But if we start to head lower strongly, which I'm actually, by the way, not so much looking for, we may get a day or two of this, and that'll steepen the curve again. But in the 200s, it's going to take a little bit longer because you can see we got this, and it's just rolling lower, not necessarily dropping like a stone. So but it should continue to react to the downside as the market moves lower and finishes this larger primary C wave decline. So moving averages still in line. RSI still building to come off of an oversold, but you can see it goes flat. So a lot of stuff is being hung around. Gee, have you noticed the RSI? It's oversold, it's oversold. And as I mentioned in yesterday's update, it's something else I'll talk about again right now. And that is that I believe that we're starting to enter into a period of time where the technical pictures will be showing us we got a turn coming, we got a turn coming, the market's going to rally, the market's going to do this. And the reality of what the market is confronting will prevent any sizable rally to really take hold. Inflation is real, folks. Inflation is spreading. We're now moving into, by this Friday, we will have finished up the quarter, and we'll be moving into the next quarter. So we'll have earnings yet again. And we're seeing most of that coming out in October. So we are moving into the fourth quarter of the year already. It's pretty amazing how quickly this time is going. But while we're rolling through that, I believe that's where we're going to see the surprises. They're jumping today, but again, so much of what I see happening in these stocks is not, I don't feel necessarily a large firm or a group of firm or just a group of traders coming in and now taking a bullish claim on any of these particular stocks. I'm feeling very strongly that it is mostly due to options activity. So it's premium, it's options, it's trading options. And when you sell a call, you're selling the underlying. Excuse me, when you sell a call, you're buying the underlying. When you're buying puts, you're buying the underlying. That's the hedge. That's the hedge for the position. So we got that going on. And I think that that's really what can start to push a lot of the stocks around. So back over in the NASDAQ, let's just take a quick peek at the moving averages here as well. As you can see, we're all still kind of curving. This gave us a little bit of a let's go flat for a while, but we're turning again. The 4 is the one that got up the highest. Now it's come back and it's all back below. So we're still back in alignment for the market to continue lower. How long this lasts, your guess is as good as mine. But I am expecting it to finish up by getting back below 11,229, which was the low from Friday morning. So that's going to be the story for right now. Continue to trade wisely. Continue to trade using your moving averages, the Fibonacci, the Elliott. And then if you're really day trading using a 1, a 2, a 5 minute chart, you can, if you all have Ninja, it's very possible to get volume, order, volume, profile. And that's going to give you the points of control, the value area high and low. And if you're running it long enough, and where you have like on an hourly chart, you're going to get all of the extended points of control, naked points of control, extended value area high, value area low, and much, much more. That's really going to help you focus on your intraday trading. Markets tend to go there because they're programmed to go there. So I'm going to end it right there. I hope everybody has a great trading day tomorrow. And our next update will be on Tuesday, the 27th.